Hello and welcome to another episode of Darwin Investors. Today we're going to talk about the AMD-Xylinx merger. We're going to talk about what Xilinx brings to AMD, have a quick look at Xilinx financials, AMD's financials, and finally just kind of come up with a fair share price, or at least what I believe is a fair share price for this new combined company. So let's go ahead and get started here. So AMD, as we know, is merged with Xilinx, and it's a $50 billion all-stock merger. So as of Monday, Xilinx was no more. They're now AMD. And we've been waiting for this to happen since October of 2020. One of the things that is really interesting to me about this deal is that it's going to pay off immediately. So while investors have been waiting for some time for the deal to close, it's going to pay off immediately. According to AMD, this merger will be accretive to non-GAAP margins, non-GAAP EPS, and free cash flow generation in the very first year. So right away, we're going to be able to add Xilinx net income to AMD's bottom line. That's important. Xilinx will trade no more. There was a little bit of a cash payout left over from the merger, but not much. But this is very important right here. Former Xilinx president and CEO Victor Peng is now head of AMD's new adaptive and embedded computing group. So this is very important because when we get into Xilinx and all of the things that Xilinx brings to the table and how many of these things that are completely foreign to AMD and the size and scope of this Xilinx operation, it's very important that they have a lot of continuity of personnel and certainly management. And so it's very important that this guy came along as part of the deal. And it sounds like he has a pretty good attitude about this. Peng said the following about the merger in the statement below. Bringing AMD and Xilinx together will accelerate our ability to find this new era of computing by providing the most comprehensive portfolio of adaptive computing platforms capable of powering a wide range of intelligent applications. So it sounds to me like he's all in, and that's a good thing. So what does Xilinx bring, or why would AMD want to purchase them for so much money? So basically, AMD, according to this, has taken a $49 billion gamble on Xilinx to gain a larger share of the $135 billion cloud, edge, and intelligent device market. And so AMD, by this, is paying about 37% of the total market opportunity just to buy Xilinx. And if it was just that, it would be a pretty bad deal, but there's more to it than that. The Ryzen processor giant, so AMD makes the Ryzen processor, they make the EPYC processor and Radeon GPUs and that sort of thing. And so the Ryzen processor giant will use Xilinx to grow in data centers, which is where the most semiconductor dollars are spent. So they're trying to get a bigger piece of this data center pie and sell more of their CPUs and GPUs. The company already is succeeding with its EPYC server processors and GPUs, though Xilinx will provide a foothold in areas AMD isn't well established, which include telecoms, automotive, and industrial equipment. So AMD doesn't currently have exposure to these areas. So that's why it's so important that Victor Peng has come along for the ride. So here's a quick look at Xilinx fiscal year 2021 results. They had a record revenue of $851 million in the final quarter. They had a fiscal year 21 total revenue of $3.15 billion. And now, of particular interest to AMD is the data center group revenue in the quarter increased 28% sequentially, and the fiscal year 2021 revenue increased in their data center group increased 20% over the prior year. So they have a data center operation that's growing, and I believe that AMD thinks that they can capitalize on this, sell a lot more CPUs, GPUs, and actually grow this data center even better than Xilinx did, using their own products. Now, here's another thing here's something that AMD isn't currently in. This is something I'm sure they have a lot of interest in. So the wired and wireless group revenue in the quarter increased 13% sequentially, driven by strength in wireless, with multiple regions deploying 5G. So now AMD is suddenly a 5G player where they weren't before, at least not to my knowledge. They also had weakness in the wired section of telecom, but I'm not so sure that AMD cares so much about that. I'm sure that they care more about getting into this 5G market. And here's another thing that they're not currently doing. Aerospace and defense, industrial and test, measure and immunization. Revenue in the quarter declined 2% sequentially, with strong industrial and end market performance offset by an expected decline in TME and softness in aerospace and defense sales. So now all of a sudden, AMD is an aerospace and defense player, and though it might be a 2% decline sequentially for Xilinx, it's a 100% increase for AMD. They've never been in this arena, that, to my knowledge. And here's another area that they want to get into. So automotive, I think this is really big for them. Automotive, broadcast, and consumer revenue in the quarter declined 1% sequentially, with a record quarter in the automotive and offsetting seasonal declines in broadcast and consumer end markets. So it's just a seasonal decline is this 1% in their broadcast and consumer. But again, I'm not so sure they care so much about broadcast and consumer, although I'm sure they don't mind adding it to their portfolio. But what I think they're really interested in is this automotive end market. So they want automotive, 5G, data center growth, and just to sweeten the deal, we're going to get some aerospace and defense. So this is what Xilinx is going to be bringing to the table. Now let's have a quick look at their financials. So when we look at Xilinx Financials, we can see that they generate a lot of revenue. 9 months ended $2.8 billion. So as we said before, they were already over $3 billion for the year ended. For net, and when we talk about Xilinx Financials, remember, we don't care about their earnings per share, because Xilinx shares matter no more. All we care about is their net revenue and their net income, or in this case, we're going to just look at their operating income, because there's some goofy numbers in here. So let's just look at this bit right here. And so in the 9 months ended, they made $770 million. So if you divide that by 3, that's roughly $250 million per quarter. So let's just call it that they're going to add $1 billion in operating income or net income to AMD's bottom line. So they're going to add $1 billion to AMD's bottom line. Let's take a look at AMD's bottom line. So here's AMD's 10Q. And so for their year ended 2021, they did $16.4 million in revenue. It's up pretty good from 2020, which was up pretty good from 2019. Their net income was $3.162 billion. Now remember, we're just going to add $1 billion to this bottom line for AMD, bringing them to $4.162 billion. And that's roughly a 30% year-on-year increase. So what does that do for the price per share of AMD? Well, one of the things I noticed was that AMD had 1.213 billion shares. This is shares used in the calculator. So they're in their calculation. So they had 1.213 billion shares. When I check Charles Schwab here, it says that they had 1.627 billion shares outstanding. So here's where we get a little bit of math here. So I'm going to pull up I did all this because it was very easy to look at here, but difficult if I was just to talk about it and put it in a calculator. So it was a $50 billion all-stock deal, if we remember that. AMD's stock total before the merger was 1.213 billion shares. After, according to Schwab, it's 1.627 billion shares. The difference of these two numbers is $414 million, or 414 million shares. The stock price at the beginning of this trading day today was $121.47, but we'll just call it $121. If you multiply $121 by 414 million shares, there's your $50 billion acquisition of Xilinx. So remember, we said that AMD's net income was $3.162 billion. And we were going to add $1 billion of Xilinx to that. So we're going to say that their new net income is $4.162 billion together as a company, and we're going to say that that's like as of like right this second. So we take 4,162,000,000, we divide it by the number of outstanding shares, 1,627,000,000. We now get a new earnings per share of $2.55. So if we go over here to Charles Schwab, they calculated it out to $2.57. So we're pretty close. I got 255, they got 257. And so let's just quickly review price to earnings ratios and how they come about. So if we take this price here, 117.69, and let's just go ahead and add, because this is done at the beginning of the day, plus the 378, plus 378, that gets us to $121.47. If we divide that by the earnings per share of $2.57, we get the 47.19 that's sitting right here. So right now, Schwab says that their current price to earnings ratio is 47, and I would agree. I've got $2.55 a share, they've got $2.57 a share. So we're in agreement there. If I look at the annual growth of the combined companies, now when Xilinx comes on, they're 1/3 the size of AMD by net income. One makes $3 billion, the other made $1 billion. So they're 33% the size of AMD. So when I look at this here, I say that the amount of growth net income wise that AMD had, 3162 divided by 2490. So AMD is growing at 3162 divided by 2490. That equals 27% growth. So AMD is growing their bottom line at 27% currently. And Xilinx is growing their bottom line at 770 divided by 553. They're growing their bottom line at 39%. So Xilinx growing at 39, AMD is growing at 27. So I think it's reasonable if 2/3 of the company is growing at 27% and 1/3 of the company is growing at 39%, that I think 33% growth is pretty reasonable. Now we're going to see that Schwab's a whole lot more optimistic than I am, and I can see why. I mean, AMD is going to bring a lot to the table. But so we're going to say that they have 33% growth as a combined entity. And so just trust me when I say that 1.33 times 2.55 equals $3.39 earnings per share. And at $3.39 earnings per share, I have their 2023 revenue at 35. And then again, I'm just going to assume that they're going to continue growing at this pace because, I mean, AMD is going to have some exposure to things that they've never had before. They're going to be able to leverage 5G, automotive, get into some of these things that say Marvell is into and NVIDIA is into, and they're going to start cracking new businesses and that sort of thing. And so I'm going to say they're going to continue growing at 33%. And so I'm going to say that their 2024 PE would be 26.8. And so that would give them an earnings per share of $4.50 in 2024. And so for me, at $121, I think that for a long hold, AMD is currently very fairly valued. I don't think it's a great value, but I don't think it's a bad value either. I think that this combined company right now is very fairly valued at $121. For me, a great price would be $100. That would get you a 2023 PE under 29.5. I don't know if it gets there because this is uh, a pretty exciting combination, and I think people could be interested to see what AMD can do with these new business opportunities. But let's see what Charles Schwab thinks. So if I go in here to Schwab, remember I said that I thought that they would have a 2023 PE of 35. Schwab thinks they'll have a 2023 PE of 30.45. So we have to say that 30.45 times X equals 121.47. So that 121.47 divided by 0.47 divided by, what was that, 30.45. So they're saying that AMD will have a share price of $3.99 in 2023, and I said it would be what, $3.39. So they're anticipating that AMD is going to grow at, let's see, divide this by $2.57. They're anticipating that they're going to grow 55% this year, which is it's pretty optimistic in my opinion, but I'm not saying it can't happen. I'm thinking that it likely won't happen, but I do think that they can have strong growth for years to come, much more than they were going to have before. So there you go. There's my 2 cents about this. I think that it's a fair value AMD at this price. It's going to open a lot of doors for them in the automotive, data centers, 5G, aerospace, telecommunications. So I think that this is a great deal for them. It's a very good deal for them. It's going to allow them to grow more and more into the future. And I think it's currently a fair price, and $105 is a great price, and $100 is a really great price, but I doubt it gets there without like a huger market crash. All right, so if you got anything out of this video, please go ahead, like and subscribe, hit that little notification bell. And until then, we'll see you next time. Bye.